Hi friends, this is Brant Spesshardt with Steward Wealth Strategies. Just want to say thank you for tuning in as we talk about proactive tax planning for 2026. We at Steward Wealth Strategies believe an educated client is our best client. We think proper stewardship comes from being able to make wise decisions with knowledge, because knowledge is power. When it comes to money decisions, tax decisions, financial decisions, we probably want to make wise decisions. Now, when it comes to financial planning, one thing we need to keep in mind is there's more to financial planning than just an account value on a statement. There are 6 key areas of financial planning: retirement planning, investment planning, tax planning, today's topic, protection planning, estate planning, and one of our favorite subjects to help our clients with, generosity. Now, in 2026, this year, there are still 7 tax brackets. However, the income ranges have adjusted a little bit, and we still have favorable long-term capital gain tax rates. And this also qualifies for qualified dividends. What's interesting here is sometimes you could have an income as a married filing joint couple all the way up to almost $100,000 and still pay 0% on long-term capital gains or qualified dividends. This is very important to keep in mind when it comes to investment or savings decisions. When we are in the accumulation stage, we need to be aware of what retirement plan contribution limits are. It's a different level for 401ks versus SEP IRAs versus simple IRAs, Roth and traditional. And remember, there's also catch-up contributions for certain retirement type accounts, such as 401k, traditional, and Roth IRAs. However, if you're between the ages of 60 to 63, remember there's also what's called the super catch-up. So make sure you're familiar with these numbers. Take a look at how much you're contributing to 401k, your simple IRA, or whatever type of plan you have through work. But if you're contributing to a Roth IRA or traditional IRA here at Steward Wealth Strategies, make sure you let us know if you want to increase how much you're contributing to keep up with the maximum limit. And if you're over 50 and you're now eligible for a catch-up contribution, make sure you keep that in mind as well. Deadlines for contributions sometimes are year-end or tax filing. It's not the same for each type of plan. So please reach out to your Steward Wealth Strategies team so that we can help give you advice in your best interest. If you have a heart for giving or generosity and you like helping individuals, remember there is a limit on how much you can give per year, per person. And for 2026, it's $19,000. If you exceed that amount, remember you have to notify your tax preparer. But remember that limit right there is per person. So husband, wife can both gift up to $19,000 to an individual, and you can gift that amount to as many individuals as you want. And if you're perhaps a grandparent, really want to help out your grandkids when it comes to college savings, there are exceptions when it comes to 529 plans that allow you to do a super gift up to 5 years of that gifting limit all at once. Now in 2025, the One Big Beautiful Bill Act was passed. Some of the OBBBA provisions include the Tax Cut and Jobs Act. Higher standard deduction became permanent and slightly increased. There is an additional temporary deduction for seniors. The state and local tax, often referred to as SALT deduction cap, was raised, and the rules on charitable giving have changed, become a little bit more complicated, but there have been some overall adjustments that favor many taxpayers. Required minimum distributions have increased from age 72 to 73, and they move up to age 75. So depending on your year of birth, that's what determines your required minimum distribution starting age. Now, one thing that many clients are concerned with, and we've talked to you for years about, has to do with Roth conversions. Remember, when you convert money from a traditional IRA to a Roth, you're making the decision to move money generally from a pre-tax account to an after-tax, tax-free account. So I'm choosing to pay tax on retirement money now so that once it qualifies, the earnings are tax-free. Now, the advantage to a Roth conversion is that Roth is not only tax-free to you, but when your spouse inherits, it's tax-free to them as well. And then when your heirs inherit, it can be tax-free for them also. But the decision whether to convert or not convert sometimes may be best if you think about family tax bracket management. If you're using a Roth conversion as a legacy wealth transfer tool, think about if you're in a higher or lower tax bracket than your beneficiaries. Now, Roth IRA conversion, the benefits, it does lower your overall lifetime income, which means you're lowering your taxable income, you're lowering your taxes. It counts for tax-free compounding. There's no required minimum distributions while you're living on a Roth. And it's tax-free withdrawals for beneficiaries. Now, that tax-free income can also affect other areas of our life. For those of you that retire that are over the age of 65, maybe you're familiar with the term IRMA, Medicare premium adjustments, as well as other taxable items that could benefit from having a lower income by making withdrawals from Roth IRAs. When it comes to charitable giving, one strategy for folks that may claim a standard deduction could be to consider doing bunching or bundling, kind of doubling up on your charitable contributions sometimes. And one of the best tools, or one of the easiest tools we've found, is to use a donor advised fund. So a lot of times with this really high standard deduction right now, many Americans or many taxpayers are not able to claim the deduction for their charitable giving, and that's fine. We don't give just because we're looking for tax deductions. We give because we have a heart for generosity. We want to make a difference. We know we've been blessed, so we want to bless somebody else. However, sometimes it may make sense, depending on your level of charitable giving and the level of your standard deduction, is to use what's called a donor advised fund. A donor advised fund, in simplistic terms, is similar to what I like to think of as a charitable checking account, where you make a gift to that donor advised fund. That counts as a charitable gift from tax purposes for that particular calendar year. But once the money's in the donor advised fund, you can spread it out and disperse it to the charitable organizations that you care about. The reason to keep this in mind from a bundling standpoint is if I claim a standard deduction and all of a sudden I make 2 years worth of gifts to my donor advised fund all at once, will that increase my giving to where maybe now I can itemize, maybe now I'm exceeding the standard deduction? So now I've made 2 times or 3 times, I've bundled and doubled my gifts so that I can get a big deduction that year. Now what happens if the funds are in a donor advised fund? It's like a charitable checking account. I don't have to give the money away all at once, so I can continue dispersing that money maybe on a monthly basis to my church, or giving it periodic over the next couple of years to charitable organizations that I care about. Please reach out to us if you have questions about this strategy. This is a very good way to possibly strategically give and still take care of organizations you care about, but also save on taxes. Now, if you're over the age of 70 and a half and you have retirement funds that are pre-tax, like a traditional IRA, a great strategy for generosity or giving is what's called the QCD, or the Qualified Charitable Distribution. This is a way to give directly from a traditional IRA to a charitable organization directly from the account. And when you do that, the disbursement from the IRA, remember those accounts are generally pre-tax, so whatever you withdraw is considered taxable income. Well, if you do a QCD and you structure it the right way, those withdrawals or those gifts made directly to the charitable organization are not considered taxable. QCDs also, if somebody is subject to a required minimum distribution, a QCD can help satisfy that required minimum distribution that you have to take. So QCDs are a fantastic strategy, especially if you claim a standard deduction you're now able to use pre-tax money without having to pay tax on it and still claim a high standard deduction. So please reach out to us here at Steward Wealth Strategies to see if a QCD may work or benefit you. The one thing that's constant is change, and tax laws do change over time. So please look for our special tax report. If you're a client of Steward Wealth Strategies, you should be able to download our key numbers and our tax report that it should have been emailed to you. But if you're not a client of Steward Wealth Strategies, please go to our website and download a copy of our tax report as well as our 2026 key numbers. Now, we want to serve more clients just like you. And our best clients come from our existing clients. And we want to challenge you and ask you, and we would be honored if you would consider being an SWS ambassador. Our SWS ambassadors, we recognize on an annual basis. These are the folks that basically introduce us to their friends and family, and we actually sit down and have a conversation with them about their financial plan and their needs, or perhaps they have introduced us to a group and brought us in as a guest speaker for classes such as Financial Peace University, or maybe a community group if somebody lives in a neighborhood where they have speakers come out. We would love the opportunity to serve more folks just like you, your friends, and your family, and folks that you care about. Keep up with us on social media. We work hard. We do a lot of good as far as financial planning is concerned, taking care of our clients, but also want to make sure that we have fun and also serve our community as well. And as always, thank you for being a Steward Wealth Strategies client. Thank you for considering us. We know you have a lot of options. It's an honor to serve you. If we can help you with your financial plan and your tax planning, please don't hesitate to reach out. God bless you.